Yeah, when everyone's saying it's time to kind of turn positive to China, you have a day like today. It seems like those regulatory hurdles are still very much there, Selina. What's your take?
We think, yes, concerns still there and risks are still there. Except that I think the market's trying to hope for what you said, that the authorities may ease a little bit, probably as soon as this month, and that should support the whole thing, at least a little bit.
A little bit. I mean, does it have to be a triple R cut? Does it have to be more? We just had a guest from Bank of America saying it has to be kind of a broad-based easing for them to actually change their views to turn more positive than China. How much support does this really add to sentiment right now?
I think we'll just have to give some confidence to the authorities. I think they should be able to do something that's appropriate in order to support the whole thing, be it the equity market or the economy.
You're still neutral in China, though?
Yes.
What keeps you at bay? I'm just wondering, and what do you still look at for opportunities?
Well, we're concerned about the new variant that's come out, Omicron, right? Last time when we're talking about Delta. And now there's a new variant. So the market's concerned and there's risk averseness. And of course, there's still policy concern, especially when we are talking a little bit more about the ADRs that's listed in the United States. And therefore, that's negatively affecting all of the internet valuation at this point. So those are the concerns that we have.
What's going to be the path forward for tech? I mean, we thought that things were looking better. We're at the end of this regulatory cycle, and then this DDD listing seems to be roiling markets once again.
I think policy concerns still the key. I think the whole market is still concerned about policy and what the authorities may do in order to regulate or manage the whole sector. And of course, there's also concerns about delisting from the ADRs in the United States, and that should negatively affect the valuation also. So all of those are overhanging the whole share price movements.
How does that impact Hong Kong, though?
Comparatively, right? And if all of those internet stocks valuations coming lower, then comparatively everything else may look a little bit more expensive than what they used to be, and therefore there's a negative hang over there. So we're negatively affected by mostly sentiment, I would say.
What do you talk to clients about when it comes to the Hong Kong market? Because it just seems like we continue to see this bad news. How can it avoid being just a value trap?
I think, firstly, over the long run, I think the market's still very confident about China's growth over the longer run. Short term, everybody, including China, elsewhere in the world also is concerned about the new variant that's come out. And therefore, what we are suggesting to clients is that, firstly, you align your interests with the authorities' goal over the long run. So renewable energy, new energy vehicle, when there's weakness, it may not hurt to accumulate a little bit on weakness. And also, over the short run, you may want to become a little bit more defensive because of the variant that's come out.
All right, Selina, hold on a second. I want to bring in Chang, our economist, to talk a little bit more about the headlines that we've been getting on some kind of signs of policy easing. It looks like we're kind of getting that.
Yeah, I agree. It is. We've been making this call for several months now. In our recent conversations, we talked about the data maybe looking a little bit better in recent months. In October, possibly looking up further for November. Yet the downward pressures are still there, and we've been calling for the policy to turn more supportive and perhaps 2 to 3 triple R cuts by the end of 2022, but we think the window for December cut is still there.
What do you think made Li Keqiang make those comments on Friday? What actually sparked this? Do you think the fact that we're getting closer to a debt restructuring Evergrande is a reason that we might see more signs of easing?
I think when the Premier made the remark, what he has in mind is more the macroeconomy. We know his remarks are not always a perfect predictor of whether a triple cut will come or not. For example, in 2020, June, his call was not followed, but this July, his call was followed. In this case, we think from a macro point of view, there's a greater need compared to July to have a triple cut. But Evergrande, it may increase the possibility of a cut in a more nuanced way. Obviously, a central bank is not going to respond to one particular sort of companies, particular borrowers' stress, but in overall terms, if it affects the overall market tensions or overall market stress, then the central bank would respond. It could respond through open market operations, but a triple R cut could increase market confidence, as the speaker has just talked about.
Yeah, Selina, do you think that this triple R cut, if it does come in the next coming weeks or so, is it a little bit too little too late at this point, given what we've been seeing in the property sector already? Do you think Beijing still has the ability and window to ring fence this?
I think I'm quite confident about what the authorities may do. And I think they're fully capable of doing whatever that's needed in order to support the whole thing. So triple R cut may be a beginning. So we'll see how the sentiment react to it before I think the follow-up steps may be carried out.
And Chang, this just goes to show how the Fed and the PBOC are really just going different directions now.
Absolutely. Its divergence is quite evident. The conversations are entirely different in two economies among the two major central banks. The Fed is talking about, whether they should speed up and tightening, taper, and subsequently the rate hike could that be moved forward even more in the first half of the year? So yeah.
Does that mean that we were talking about how the renminbi rally? Does that actually the easing that we could be seeing here? Does that mean that we could be seeing that fade now?
It's a bit complicated, how the RMB might be affected. On the one hand, when the interest rate in the US rises, the yield spread between the two economies narrow. Potentially that could draw out capital from China. Then on the other hand, if there's more confidence about the Chinese economy stabilizing, there could be more capital coming into the economy. So it's hard to tell which direction it's going to sway.
Yeah, what do you think the direction of the renminbi is going then?
It's quite strong. And I think export is still very strong, right, for China. And that's actually surprised on the upside compared to what the market has to expect. So I think RMB may not go anywhere meaningfully. Compared to what it's trading at this moment, at least for the next 3 to 6 months. So that's our house call.
You mentioned you have full faith in authorities in China. I'm just wondering, do you think that this is a signal from the premier that this is a new easing cycle for China? Would you put it at that, or a signal at least at a significant policy change?
I would say the Chinese authorities is not very good at leading the market expectation, and I don't think that's what it meant to do. But it's quite reactive to what's happening in the market typically. So I think the authorities is reacting to what it sees in either the macro economy or the financial market. It's reacting to it rather than to lead it. So let's wait and see and what the market do when the triple R cut really comes through, and we'll go from there.
So does that mean if they're just being more reactive, that we're just not going to get that much upside when it comes to any kind of announcement? Or are there certain sectors that you think could actually benefit from an announcement like that?
I think it may turn the market sentiment. The sentiment right now is quite negative, risk averse, and when the actual action comes through, it may actually turn the sentiment. I think that would be good enough.
Chang, my last question to you. Do you think with Omicron risks and all that, does that just double down the zero COVID policy for China?
It looks to be that case, and we thought through what Omicron might affect, how it might affect the economy. We think the impact is more on the growth side, less on the growth side, more on the inflation side. But that does seem to enforce the country's conviction on zero COVID policy.